Welcome back, everyone. Today we'll be looking into Visa. Now, this is an extraordinary company who seems to have their hand in any transaction that's related to currency in any form. Now, after a deep dive into Visa, I quickly realized that they are a bigger beast than I anticipated. So much so that I'm seriously considering adding them to my portfolio alongside MasterCard. So if you want to find out what got me so excited about Visa, just stick around. Alright, so it's time for the portfolio update. We're currently sitting at 833, and we've lost 6.61%, which is just a little bit over $31. Now, we have earned $3.05 in dividends, and if I scroll down here, if you're new to the channel, what we do here is we invest $10 a day into Dividend Growth Stocks, and these are our current holdings. Now let's move on to Visa. Now, everybody thinks they know who Visa is as a company, but here we are on the Visa homepage, their cover page of their website, and the first thing that it says is blockchains are entering their broadband era. They're basically selling you the idea of blockchain. Now, you wouldn't think that Visa, a transaction company, would be a part of that blockchain, but guys, they do so much more. They're part of that. They're the financial sector, but they're fintech. They're buying up a bunch of these startup companies. They're gonna get huge. But what I want to do is go down here to the what we do about Visa, and they have a great website, guys. It's very easy to navigate. But if you go over here, it says Visa helps power the global economy. What they do is they have 4.2 billion Visa cards connecting people globally. They have over 15,000 financial institutions, 269 billion payment transactions, and 100 million merchant locations around the world. But what I find to be most interesting is how they started. So they started with the Bank Americard in 1958. So Bank of America launches this Bank Americard. So it's the first card with revolving credit as a feature. And then in 1976, Visa's born. So Bank Americard becomes Visa. Why did they name it Visa? Because Visa's a name that sounds the same in all languages. That's great marketing. A+. And then in 2007, Visa forms a global corporation. So Europe remained member-owned, but they were a global corporation, and that's what really began the beast. So in 2008, the company went public, and it's one of the largest IPOs in history. Today, they're in more than 200 countries and territories worldwide. So Visa is a huge beast. So you may be thinking, well, there's no room to grow. But now let's hop over to the financials. This is what gets me really excited about Visa. We're on Seek and Alpha. The first thing you notice about Visa is the price at $231.27. Now that is getting towards the higher end of the 52-week range of $250. But the PE ratio is still at 26.53. Now the dividend yield is 0.78%, but I do want to say if you were invested in Visa over the past 10 years, you've gained 377% on your investment. If you divide that 377 by 10 years, you have an average of 37% return on your investment. That's pretty crazy, guys. Let's go look at the financials. Now, here's what gets me excited. This is the nitty-gritty stuff, guys, where I like to see it always increasing. They have a bad year, a COVID year. This is what they consider a bad year. They went from 20 to 22 to 21, and then they rebound back to the 24, 29. So I love to see that. This is a company that just knows what they're doing, guys. We go over their net income. It's the same thing. It's the same deal. They had a little bit of a rough patch in 2020 with the COVID, but they got back on track very nicely. The payout ratio, trailing 12 months, 21%, and then if you look, they've never even really been over 25%. So I like that to be below 50, 60%. They are well below that. Now the EBITDA, I did calculate out their net debt to EBITDA. It's at 8%, and just to put it in perspective, MasterCard is at 60%. So Visa is doing a very good job. Let's go over to their dividend history. That's what this is all about. I love the dividend growth. Consecutive years of dividend growth, 14. The sector median is 2 years. So I do want to say as well, if you're looking at Seeking Alpha here, the SA analyst, the Wall Street, the quant, the only red mark that they have on here is the valuation, and I think down here the yield. So obviously they're not yielding much. They're just a little bit below a 1% yield. And Seeking Alpha thinks that they're valued a little too high, but their PE ratio is good. So I don't know why that's an F. But moving on to their dividend history, if you look at a dividend history chart and it looks like this, this is definitely a company that you want to buy. This is exactly what you want it to look like. And then I want to go over and show you guys this on their dividend scorecard. This is all, so their dividend safety, A+, what I was just telling you guys about with that net debt to EBITDA. So their dividend safety, the company's ability to continue paying current dividend amount. So they can continue paying their dividend because their net debt to EBITDA is at 8%. They have not a lot of debt and they make a lot of money. So the dividend, which is, 0.78%, it's always going to keep growing. It's growing at a good pace. Let's go back here. I think it's growing at like a 20% pace. So the 5-year growth rate, 16.89. I think that this dividend isn't going to slow down at all. And I mean, geez, Seeking Alpha says the same thing. They give it an A+, dividend growth A+. The only thing that they get an F in is the yield. But you give that another 10 years, like what I was just saying when I was talking about this 10-year right here, the stock price, yeah, it's gone up. So you're capitalizing on that. But now current investors through the next 10 years are also going to profit on dividend yield, their dividend increases. So do I think that Visa is a buy? Of course I think Visa is a buy. Look at the rating summary here over on Seeking Alpha. Now I don't really play into factor what they say, and this is actually the first time that I've paid attention to what it's even said over here. But they're even saying buy, and I think this is a scale out of 5. I'm not going to read all that, but I think this is a scale out of 5. So everybody's saying to buy them other than whatever the quant is, but the quant's fired, so that is what it is. But guys, Visa is so popular. Visa is so popular. Let's go back over here. Visa is so popular. All they do is take part in your transactions. They're not even the ones giving you the card. You're getting that through a separate entity, okay? You're not even getting the credit card through them. So everybody has a Visa card. If you have a debit card, you most likely have a Visa card. And what they do is they charge, whenever you go spend money somewhere, they charge the merchant where you're buying that product from. They're charging them a fee for using their transaction service, okay, to get paid. So I mean, guys, think about how many times cards are swiped or tapped or whatever. They're even in on Apple Pay. Think about how many times cards are swiped or tapped throughout the day, and they're getting a small percentage of that. I mean, it's incredible, guys. This is a company that, let's go back over, guys. They make so much money, and it's only gonna keep increasing. $31 billion in total revenue. This company is an absolute monster, okay? So yes, I think that I am going to put this on the watch list and continue watching, and if not, at the very least, I might end up splitting MasterCard and Visa in the portfolio. We'll see. Thanks for watching, guys.